Hi everyone. It's good afternoon to our Australian investors and good morning in South Africa. Welcome to today's webinar. My name's Sam Jacobs from 6 Degrees Investor Relations, and I'll be hosting today's presentation from Southern Palladium Managing Director, Johan Odendaal. Johan will also be joined today by Southern Palladium Project Engineer, Daan van Heerden, and geologist Uwe Engelman. Today's presentation will provide an update on the company's latest activity following the release of the pre-feasibility study for the Bengwenyama Platinum Group Metals project located on the eastern limb of South Africa's Bushveld complex. Released at the end of October, the PFS had some attractive unit economics, including a post-tax ungeared NPV of more than $1 billion. And today's presentation will provide an opportunity for the on-site field team to highlight some of the more technical components from the PFS. So after the presentation, we'll commence a Q&A. That will comprise both written submissions and live questions. So if you'd like to join the Q&A, please submit a question via the Q&A tab. A copy of the webinar will be available on Southern Palladium's website and social media platforms later today. And you can download a copy of the PFS announcement from the Southern Palladium website. But for now, I'll throw it over to Johan to kick things off. So Johan, the floor is yours.
Thank you, Sam, and thank you all for joining us today to discuss the Bengwenyama project, and in particular our pre-feasibility study results. As Sam mentioned, it was an excellent year for us, and not only did we report increased resources, but we released excellent results on the PFS study. But Sam, with that, could you please go to the next slides? Thank you very much. Just to orientate you, we are sitting in South Africa in the northeast corner of a country, and we are in what we call the Bushveld complex. It's a huge complex, and we are sitting on the eastern limb where we explored for the 6 PGMs plus gold. But also in the reef, we have nickel, copper, and chrome. So quite an amazing ore body. And the results are showing that we're sitting here with quite a huge ore body. Next slide, please. In terms of our capital structure and the current shareholding, that basically remained unchanged since we listed. With 2 major shareholders in the underlying company which holds the Bengwenyama project. So Southern Palladium having 70% and the community through their investment company Neuronox holding 30% stake in the underlying company and also 9% in the listed. Our capital structure, as I said, remained virtually unchanged. Market cap at the moment at 64 million Aussie dollar. Still cash in the bank after we completed the drilling and the PFS, close to 5 million Australian dollars, which gives us an enterprise value of 59 million. You will see that our share price basically followed what the basket price has been doing. This is a commodity company, and so it is subject to what is happening with commodity prices and what is happening with the cycle. And you can see what happened during the year. Also with the commodity price, we've seen that now sort of bottoming out, and albeit that prices haven't really reacted yet to supply and demand fundamentals, we've seen that our share price reacted nicely and ticked up after the release of our PFS. Next slide, Sam. This just put our project into perspective, sitting there amongst the world's biggest platinum producers, owned by all the majors. And you can see what I've done here was to report it on a 4E basis. And that 4E basis is basically platinum, palladium, rhodium, and gold. And you can see in terms of our resources, UG2 resource on a 4E basis, similar, and also the total resource similar to those major companies or major mines on that eastern limb. And similar with the production on a 4E basis, you'll see that we'll reported a 400,000 ounce production. That's based on 6Es, but compared to 4Es, that's how historically all the mines reported it, up there with the world's biggest mines. This just shows our focus area. What we are doing is we've got two reefs on the property, the Merensky Reef and the UG2, which is about 250 meters below the Merensky Reef. The Merensky outcrops on the property and the UG2 sub-outcrops at around about 50 meters on the eastern side of the ore body. And that's where our focus has been with the drilling. And I mean, the resource showed excellent results. We reported a measured resource of 2.3 million ounces at 10 grams per ton in an area where we plan to access the ore body via two declines. So it allows us to enter the ore body in an area which shows excellent grades. And the figure below just shows the two decline position, one to the north and one to the south, with our tailings dam sitting in the far north of the property. What I've also shown here is what we call pearl splits. That's the ratio of the various metals in the ore bodies. And you can see the two ore bodies do differ. The UG2 gives us a equal split between platinum and palladium of 1:1. So platinum 37%, palladium 37%, and quite a high rhodium content. And the other metals, of course, contributing 17% in total. Merensky Reef is slightly different. That's got a higher platinum content and lower palladium content. What we'll do is we'll initially focus on the UG2, keep the Merensky Reef in our back pocket, but once we're in there mining with mining the UG2, we could come back and start to look at the Merensky Reef. Thank you. This basically just shows our commodity leverage over the life of mine or the ore body. You've seen the pearl split that I mentioned earlier, but in terms of production, of course, as a result of that pearl splits, our platinum and palladium production over the life of mine is very much similar, 2.8 million ounces for platinum and 2.85 for palladium. So 1:1 in terms of production, and rhodium around about 590,000 ounces. What is becoming more important, and what we've did also with the assaying, was to assay for all the PGMs, because ruthenium and iridium is becoming more and more important in the electrochemical environment, and also with hard disks and electronics, and in the green economy. Much more important nowadays than it has been in the past. And you'll see that iridium, although it contributes, or we produce a small amount, it contributes quite a significant portion in our revenue stream. So platinum, palladium, very similar. Rhodium, quite a significant contributor. So more or less a third in terms of contribution by each. But another important revenue contributor, and we've seen it without the Bushveld recently, is that chrome is becoming more and more important. Of course, the UG2 in particular does have a high chrome content, and we will produce a chrome ore as well, which will contribute in terms of the price deck that we used, 12% in our revenue stream. Next slide, please. Sam. In terms of our PFS results, this is a big operation, and we're looking at max capacity of 2.4 million tons per annum produced from a UG2. So that will give us in the order of 400,000 ounces of PGMs, which is significant. And you can see on the right in particular the NPV sitting at a just over $1 billion. So that is big, and that was done at a real discount rate of 8%. IRR also significant, 28%, and gives us a 3.5 years payback from the start of plant production. The other highlights I just want to emphasize is peak funding requirement at 450 million. Our initial capex is 385, but our capitalized development adds to that number to give us that peak funding requirement of 450. That includes a 15% contingency added, throughout the whole process. But you can see once we are in production, we will produce a significant free cash flow in the order of 220 million US per annum. Also important is our all-in sustainable cost of $800 per ounce, and that places us at the lower end of a cost curve, and that's where you want to be when we are in a lower price environment. Next slide, Sam. This slide we just sourced from René Hochreiter, a well-known resource analyst, and he placed us right there at the bottom of the cost curve. Our scoping study results at that point in time was shown in that green bar, and the guys sharpened their pencils with the PFS, and you'll see that we moved slightly down on that cost curve compared to where we were with the scoping study. So absolutely a good position to be in. And as I said, in particular in a low price environment, it just gives you that comfort when prices go down. Next slide, Sam. Our price deck, we used in order of 1,200 for platinum and palladium, which gives us, if you look at lower down our sensitivity analysis, a price basket, and that's 6Es of $1,550 per ounce. And that compares quite well with where we currently sit at $1,460 an ounce. And that is at the bottom of, like I say, the platinum cycle or price cycle. And so that gives me a lot of comfort for this project. Again, if we look on the bearish side, if you reduce prices by 15% to 1,300, and keep in mind that we are at the bottom of a cycle sitting at 1,400, even at those levels, this project is still fairly robust and still having an IRR of just above 20%. Sam, the slide jumped. Thank you. Just above 20% on the IRR. On the bullish side, and this is where we hopefully be heading into the years to come, you can see what the impact is on both the NPV and IRR. Next slide, please, Sam. Just quickly on the outlook and what we're planning to do. Most of 2025, we will now focus on the feasibility study. Feasibility study is we're currently busy at looking at sort of various options. I think the PFS gave us a fairly good idea what we can now get from the ore body in terms of maximum capacity and also in terms of NPVs. So now we need to set ourselves up for financing, and we're currently doing a lot of work in that regard. But we see that we'll spend most of it 2025 in finalizing our feasibility study, which then put us into early 26 with our final investment decision. Now, that final investment decision depends on our debt financing. We will, of course, start already by sort of mid-2025, third quarter 25, talking to debt providers. So what could happen with our FID and study updates? Those study updates are normally requests from the banks to do due diligence. So that can change and it can shorten, but we were conservative in terms of our numbers. So if it shortens, of course, our mine construction will start much earlier and could even start in 2026. And that construction will be anywhere between 2.5 years. But again, as I say, we're looking currently at various options to reduce this and reduce the timeline and also make it attractive for debt advisors and also in terms of our equity raise. Next slide, please, Sam. Just quickly on our applications for, in particular, our regulatory requirements. Of course, we are doing this project with the Bengwenyama community. This is a community that we've been in partnership from the start. And we are in a fortunate position that we have a single community on this project. And through the years, we have launched various initiatives in terms of bringing the community in terms of work and short-term projects, and also making them part of a project. One of them was also a soccer tournament that we initially launched this year. 10 teams or 8 teams on the soccer side came in and played in the tournament, and we also had a netball team or 4 netball teams participating in that team. So quite active in terms of on the ground what we doing in partnership. Our social and labor plan that has been submitted and aligned with the regulatory requirements for community development. So that's gone through the review process. Our environmental impact assessment that has gone in July, and we're waiting for the final approval process on that. Mining right approval application that has already gone in last year, September 2023, and we expect the final granting of a mining right to happen towards the end of the first quarter, beginning of the second quarter of 2025. So all our applications in terms of regulatory requirements is there. Water and waste management license that has been initiated and started. So that sort of completes our final applications that we need to submit. So on track with what we plan to do, and we don't foresee any significant red flags at the moment. Next slide, Sam. Then finally, just on our project and why our project. If you look nowadays on all the major countries out there, you'll find platinum on their critical minerals list. So platinum and platinum group metals have become more and more important in terms of its importance in the modern technology improvements and also in energy. So we have here a commodity that certainly is going to play a very important part in the future. And what add to our advantage is the fact that we have a project that is shallow. It's the last remaining shallow real estate that we picked up there on the eastern limb. It is accessible at close to surface, 50 meters from surface, and which allows for short development time and also lower capital cost. This project is now well advanced. We understand the geology, we understand the resource, and we have a significant resource up there amongst the biggest platinum mines in the world. A reserve sitting at 6.3 million ounces, which is big, and of course a large NPV and good returns. And finally, we are developing this in partnership with a single local community, and it's a flagship project, not only for us, but I think overall for the country at the moment. Thank you, Sam. That's all from our side.
That's much appreciated. Thanks, Johan. It's really useful overview there of the PFS and the broader project. So we'll turn to the Q&A now. We've had quite a few questions come in, particularly on the technical side. Perhaps just to open up with you, Johan, one investor just sort of looking at the project more broadly, noted that you've built the resource to 40 million ounces here and identified a PGM reserve of over 6 million ounces. Going back to your IPO in mid-2022, you started off with 19 million in funds from that raise, still got around 5 million left. If you add that all up, are you sort of surprised how well this has all turned out, looking back kind of 2.5 years later?
Sam, yeah, I think although when we started, we did a lot of homework before we went to the market, and we were reasonably, sure what we could find. But I think again, this Bushveld complex is just amazing, and it certainly surprised us on the upside. I think 50 million ounces is just fantastic, and to finally declare a reserve of 6 million ounces is great. But I think, the ore body, apart from that is a fantastic ore body. I think it was a concerted effort. It just, what we achieved here, I think, is testament of a good board that we have in SPD and also on the operating level. So good board, but also in terms of what we did with the exploration program, great managers on the exploration side managed the exploration very well. We were focused right from the beginning. We knew exactly what we want, and we worked towards that goal to finally have these results. So absolutely stunning results, and I think even for us, surprised us on the upside.
Yeah, thanks, Johan. Perhaps probably a good time to turn to the geology. So we'll ask a couple of questions for Chief On-Site Geologist Uwe Engelmann. Uwe, one question came in covering off on the results from the PFS, where you reported a measured grade of 10 grams per ton PGM over a reef thickness of 77 centimeters for Bengwenyama. In this investor's view, that seems quite high. And in the PFS, you also mentioned this footwall mineralization that you found as part of the drill process. So taking that into account, can you give us a bit of an explainer how you go about planning to mine this ore body?
Yeah, so I think just to start off, just like Johan just mentioned, is that we're quite fortunate with the UG2 reef is that it is fairly homogeneous and consistent over hundreds of kilometers. So if you look at where we are situated between Two Rivers and Madikwe, our seam width of the UG2 or reef width is slightly lower than what theirs is. So we are in an area that's been affected by a doming structure which has attenuated the reef, which means it has thinned it out. Because if you look at Two Rivers and Madikwe, they are slightly wider than us. But if you have a look at it from a content point of view, the grades are fairly similar, like I said, because of the UG2 being homogeneous. So the centimeter gram per ton over the width of the ore bodies in the operations are similar. That's around about 640 to 700 centimeter gram per ton. So where we're lucky is that we've got a higher grade at a lower width. And I say lucky is because, or fortunately, is because it means we have to treat less tons than the neighboring operations. Hence, the grade looks higher than what it is. It's because of the effect of the lower stoping width or the reef width. Having said that, we've also got the footwall mineralization, which appears in a lot of the operations. which is where you've got the disseminated chromite in the footwall of the peroxide footwall. So that carries a lower grade or low mineralization, and normally sits around about, well, in areas it goes up to 1.7 gram per ton, but it also goes down to zero point 0.2. So on average, you're sitting about on a 4E basis at about half a gram per ton over the 40 centimeters or so. So when we mine these flat tabular ore bodies, we mine it as stoping width. Obviously, we try and reduce it because you're trying to reduce all the dilution. So we take it from the hanging wall if we can, down the reef is well, ranges anything from 50, and we have got wider areas going towards Madikwe, which is sitting at about 1.3 meters, but on average, call it 78, 80 centimeters. So that means we've got 20 centimeters of footwall dilution. So instead of having zero grade coming with that dilution, we've actually got a point 0.5 gram per ton grade being contributed for what it's worth. So where we are also fortunate is that we do not have something that they refer to as the stringers, which are thin chromatite stringers in the hanging wall, which normally breaks, causing dilution in the hanging wall. Because it's quite difficult to keeping that up at times. But we're very fortunate in our operation or our part of the bushveld is we don't have the stringers there. So our hanging wall will be a clean cut, should be a clean cut on what they call the LPP by us. And then the dilution will be in the low grade footwall side. And that also contributes to the higher grade that we've got going through to as a feed grade to the plant. I think that's in a nutshell, while we have got a higher grade where we're sitting, as well as the way that we will be mining it. But again, I think where we are fortunate is that we don't have the stringers, and the mining dilution will be in the lower grade mineralized footwall, basically.
Yeah, that's interesting. Thank you. Thanks, Uwe. And another question, just talking about the grade and starting with the UG2, perhaps this question looking a bit further downstream, but is it possible to talk about how that high grade UG2 mineralization can then be delivered to a plant for processing?
Well, it's like I said, so I suppose it comes down to the fact that we've got the centimeter gram per ton over a narrower reef width than our neighboring operations. So the content is basically squeezed into the narrower reef, because if you look at the content, it's similar, and that translates into higher grade going into the feed grade at the end of the day. Where the mining guys, mining guys will obviously always try and reduce the dilution as much as possible. And in this case, the PFS has been designed on a stoping width of 1 meter. If we can reduce that to 90 centimeters, or even lower in places, that'll increase the grade even higher, because it'll be less of the lower grade dilution and just pure chromatite reef coming, or UG2 reef coming into the feed grade.
Yeah, interesting. That's useful context there around that stoping width. So thank you for that. Just going on with the mine plan and the broader process, Dan, I might turn to you now for this question. But a couple of investors have written through with questions on that depth to commence mining. So the PFS flags that you can start mining at quite shallow depths, right, around 50 meters. As a starting point, can you talk about how that compares to the other PGM operations in the bushveld?
Yeah, certainly. Thank you, Sam. I think the one thing that we must remember, that this is a brand new mine. And if you compare back to the mines in Rustenburg, remember that platinum has been discovered 100 years ago, and many of those mines in Rustenburg are mature mines. They on third tier infrastructure. So they also started off, with a decline shaft many years ago, then went to first generation vertical shafts, and they on second generation vertical shafts, putting them, anything between 800 and 1,200 meters at the moment. And if you go to the extreme to northern, to the Zondereinde project, that is that is actually 2,000 meters deep. So, we're not different in terms of geology. We're just early in the mine development curve. And if you compare then that to the eastern limb, where mining started much later than in Rustenburg, Madikwe, similar than us, also started off fairly shallow, but they 10, 20 years down the line, so they probably sitting at around 400, 500 meters in depth, where we will also be in 20 years' time.
Yeah, nice one. Okay, thanks, Don. Yeah, so just, staying with this mining method that's been set out in the PFS, it sort of talks through a hybrid approach, right? So you combine some mechanized development with that conventional stoping. Could you just sort of provide some context on whether that hybrid approach, again, just in comparison to that broader bushveld, given that the bushveld is the global home of PGMs, kind of how that mine plan compares to other projects nearby?
Certainly. So the hybrid that we've decided on, initially during the concept study, we elected a on-reef mechanized development with conventional stoping. In the pre-feasibility study, we have now changed that to off-reef development, mechanized, and conventional stoping. And the reason for that is that the complexity of our geology, it just allows us to negotiate faults a lot better and easier and more effectively. We've also discovered that Madikwe, our neighbors, has also moved from a on-reef hybrid method to a off-reef hybrid method. But then if I go back to the Rustenburg area, and when those mines started off, they were all conventional mines. Many of them have now converted to hybrid. Examples are Swartklip, Anglo-American Swartklip. They have converted to hybrid. There's still some mines, Marikana, that's still conventional. And then on the eastern limb, Madikwe, like I said, is hybrid. Twickenham is hybrid. So hybrid has become the norm for the shallow or for the narrow width UG2. And then if you look at the mines that are blessed with higher channel widths, like Two Rivers, and also what's the other one I'm looking for? Boyson's Dal. Those two operations, because of the width of the UG2, are fully mechanized, and they're employing board and pillar. But for our channel width, I think hybrid is the norm, and we're happy to go that route.
Yeah, thanks. No, that's good context. So perhaps just staying with that vertical depth point of around 15 meters, a few investors have been interested in that. Someone else asked about how that will affect the CapEx projections, given that you access that mineralization at a depth of around 50 meters. They asked, how does this affect the CapEx projections and timing for project development, again, perhaps relative to those other established projects in the bushveld?
Yeah, so that's really fortunate that we are that shallow, and because we are using declines to access the ore body, 50 meters means approximately 500 meters, linear distance of development. And we actually hit first reef intersection will be in the first year. Stoping will start before the end of the second year, which is very quick for a tabular mining project of this nature in South Africa, and it's because of being that shallow. So that's a huge advantage, and also because of that, we move on to steady state production within 6 years, which is also pretty quick for this type of ore body. And of course, the fact that we are doing declines does have a very positive impact on the capital requirement. It's a lot less capital intensive than vertical shafts. Um, it does mean also that we need to build the plant fairly early in the project timeline, which adds to capital. But in general, it's very positive for capital requirements.
Yeah, interesting, and also interesting how quickly you can advance the project there due to that shallow grade. Again, that might have something to do with one investor noted that the capital costs came down in the PFS from the scoping study, which is kind of rare, but they were listed at just over 400 mil in the scoping, and now they're down to US 385 mil, with all-in sustaining costs also down to around US 800 from US 836. That's for 6E PGM. Is that connected to the shallowness, or just sort of how did the company kind of manage to achieve that? And do you think that as the project develops, there might be opportunities given the mineralization to cut those costs even further?
Yep. So the purpose of the PFS was not to reduce the capital cost. So this was a very pleasant upside from completing the pre-feasibility study. The focus of the pre-feasibility study was to put a quality mine plan on the table and a realistic time plan, and also the big focus was to improve the accuracy. Now, of course, the accuracy is now higher. It just also demonstrates that I think the quality of our concept study was pretty good, but also many things has changed. We've moved the position of the plant. And that was not to save capital. That was just to optimize and to have a better location for our plant and to align it with the ultimate position of the tailings dam that has also moved. We had to reduce the footprint of the tailings dam because we were constrained with land availability, which had a positive impact. But then, we've decided as a responsible mining company to go for dry stacking. That added to the capital. As I said before, we moved from on-reef to off-reef development. That actually added to capital. So there's many things that have changed, and the focus wasn't to reduce the capital, but it was a good result for us at the end of the day that we came in with lower capital than before.
Much appreciated. Yeah, thanks, Dan, for that comprehensive summary of the kind of mine outlook for the mine plan. Might turn to some questions on infrastructure now, which are always a big issue for South Africa. Perhaps, Johan, I'll start with you. Just in terms of the surrounding infrastructure at Bengwenyama, if you think about Bengwenyama's location within the bushfield, given it's so established for mining PGMs, there's obviously a lot of established infrastructure too. Do you think that simplifies the pathway to mining it and project development for Southern Palladium?
Sam, yes, I think the benefit that we have as a new entry into that area is, of course, that we are surrounded by established mines, and those established mines, of course, required infrastructure. And so we arrive there at structure where there's already a path or a tarred road from Johannesburg. The access to our tenement area is actually all.
I think we've just lost Johan there mid response, so we'll see if we can get him back. He's Johan.
So I think I'm back.
Yep, I think we've got you.
Yeah. So there's a TARD road. And then I think if we just look at the other infrastructure as well, water, there's a water pipeline that serves the existing mines. There's a new dam built that will be connected. So there is water also running past the entrance of our operation. Electricity substations about 5 kilometers we are at the moment looking at 2 substations to supply electricity. The one is about just north of us, 5 kilometers, and the second one at an existing chrome smelter just about 3 kilometers from us. So and mentioning the chrome smelter as well, if we just look at downstream beneficiation and offtake, that is also very important to us. And on the chrome specifically, as I mentioned, chrome smelters, there's 2 close by to Batse, just across the road from us, and also the Glencore line smelter about 5 to 7 kilometers south of us. The other important aspect that South Africa, I think, have is the benefit of having, an established downstream operations in terms of smelters, base metal refineries, and also precious metals refineries. So it's all there. So, on the PGM side, we can literally load a truck in the morning with concentrate, and that gets delivered by midday out at Rustenburg. So everything is there that we require. Skills are there. There are, in terms of supplies, 2 major mining towns close by. So all in all, the infrastructure is there, and it just makes it easier. We're not out in the sticks.
Yeah, nice one. That's a really useful summary. Thanks, Johan. Perhaps either Johan or maybe Dan can jump in for this one. But a couple of questions came through on that South African power situation. Obviously, always a talking point. Eskom as the national power provider, I don't think there's been any load shedding since around February this year, so it's been stabilizing. One investor did ask, looking ahead, some doubts around Eskom's aging installed steam turbine base if you project it out perhaps 10 or 15 years. But just on that broader South African power situation, Dan, is there some insights or just some general commentary you can provide in terms of how the company's thinking about that?
Yeah, so from a feasibility study point of view, the way that we've approached it is that we've assumed that grid power would be available, with a view that the outlook for power generation in South Africa was improving, and that has panned out to be true up to now. We're also aware that the mix in South Africa is changing rapidly with private suppliers coming into the market, independent power producers, and many solar farms are being erected as we speak, and many wind farms are coming into production. So our outlook is certainly more positive, and that's why our base case was still assuming grid power. However, we've done a lot of work during the feasibility study on alternatives. So we have considered, a solar farm on our property. We have considered, having wheeling arrangements with other solar power suppliers and wind power suppliers in the vicinity. And we were also considering natural gas. So we are looking at alternatives in the background, as a backup plan.
Yeah, nice one. Thanks, Dan. So, if we look back at this project more broadly now, Johan, turning back to you, a couple of investors have asked about the recent roadshow that you undertook with Southern Platinum Exec Chairman Roger Baxter. Following the release of that PFS around the end of October, which prompted a re-rating in the stock price. And then you and Roger visited investors in New York and Toronto. A couple of investors were just asking about what kind of feedback you got from North American investors and what the sentiment was like over there following the release of the PFS.
Yeah, Sam, I think just firstly on our decision to go to North America, certainly, if we look at where we started and absolutely amazing initial capital raise that we had, we now need to broaden our horizons outside Australia as well, and also broaden it to North America and the UK. Considering that eventually we will need to raise significant capital for this project. So that was the main aim of going there. Of course, we arrived there a week before the elections. Nobody knew which way it was going. But that wasn't part of the discussions really. I think nobody, as I say, knew where it was going. But we attended in New York a conference that was arranged by the Johannesburg Stock Exchange. Is a tomorrow investment conference. Quite an upbeat conference, I must say, and good sessions that we had there. I think the message that came out is that South Africa is certainly again on the radar screen for investment. The GNU or GNU, as we call it, is working. It is probably the best outcome. But overall, I think the talks that we attended there was very positive about South Africa, and going forward, I think the combined industry government partnerships with regard to energy and crime and also logistics, it's starting to take effect. So that is sort of the positive news. Turning to our just in general our meetings, I think what we do find is that as I say, South Africa is starting to get back on the radar. Still some cautiousness from North America, but I think what we showed here is that South Africa is still definitely a mining country. It's still a country that could produce significant projects, and I think the size and the mere fact that this is a $1 billion project with good returns did receive the attention of fund managers over there. So overall, good response that we got over there. I think again, like across the world, everyone is waiting for final global recovery and interest rates, further interest rate easing. And I think the general, message out there and what that we got was that we are at the bottom, and looking forward, it can only go better. And hopefully, if we consider that, and we also look at supply and demand fundamentals, which is supporting the longer term price, I believe that with our development of our projects, we hopefully be there at the right time, at the right place.
Nice one. Thanks, Johan. So look, that's a pretty comprehensive summary of the project as it stands right now. I might just round out with one question. Given how far you've brought Bengwenyama along over the last 2.5 years, we've got a PFS with an MPV of over $1 billion. So, we're heading into Christmas 2024. For investors following the company, what are these key milestones, do you think, over the next 6 months heading into the middle of next year, where you'll be looking at final investment decisions and potentially major capital investment?
Sam, I think there's several milestones. We as a company always, put those milestones in place. Given our historic achievements and what we did, I think we can achieve them again this year. what we did, the pre-feasibility study, of course, gave us a very good idea now what we have. We've got an elephant by the tail. It's big. It's amongst the best in the world in terms of platinum production. What we need to do now is take this project, which has got a significant NPV, but also a big capex, relative small to some of our peers, but nevertheless, we need to see how we can make it workable now in terms of capital raise and financing. So Don and his team has been working at around the clock to look at that, and there's quite some interesting options which we can't at this moment, announce, but nevertheless, I think what we can do now is take what we learned from a project and move forward. So next year will be finalizing a option that we will take into feasibility stage, and so that is our main aim for next year, is to finalize that feasibility study. Another important milestone, of course, that we're looking forward to is our granting of our mining right, which is now actually around the corner. The fact that it's going to hopefully happen towards the end of first quarter, beginning of second quarter next year is not holding up anything. So all in all, I think this project is progressing well for us, and with what we have now in the bag, I think we can at least again next year look at quite a fruitful year in terms of what we're planning to do.
Yeah, that's well noted, Johan. And the mining right application in particular, pending approval there, late Q1, early Q2, calendar year 2025, a key milestone for investors. But that concludes today's webinar for now. Thank you, obviously, to Johan, also Dan and Uwe for covering off on the more technical aspects of the PFS, and for taking time to answer questions. Thanks also to our attendees, obviously, and those who submitted questions in the live Q&A. There were quite a few in the end, so apologies if we didn't get to everyone, but I think we've covered off on the project in considerable detail. So as mentioned earlier, a recording of the webinar will be available on Southern Palladium's website and social media platforms later today. Before we go, Johan, do you have any final comments that you'd like to add?
Sam, I think, for us, we, through the various stages of a project, we always look forward to what is our next milestone and what is our next achievement. But I think we are absolutely at a time in our development life that this is an exciting project and an exciting time that's lying ahead for us, not only in terms of potential price uptick, but also in terms of what we have now in the bag and what we can do in the next couple of months. So for us, exciting times, and hopefully I think it can also excite our investors and potential investors.
Great. Yeah, thanks for wrapping up there, Johan. Well, that concludes the webinar for now. So thanks again to the presenters and the attendees. We'll see you again soon.